We are back to today's Bizfit program. For those of you who were with us earlier, welcome back. For those of you just joining us, welcome. We are now entering the second part of the program, where the topic is going to be Money Never Sleeps, Tips for Small Business Owners. We have Maria Gaitan with us today. Hello, Maria. A little bit about Maria. She's Consolidated Credit's Community Impact Liaison and has 20 years of management, lending, and business development experience in the banking sector, 13 years of nonprofit management and program development experience in the credit and housing counseling industry. She's partnered with over 100 organizations nationwide to conduct personal finance education programs and training. Her efforts reach a lot of low to moderate income Americans each year to assist them in becoming financially stable. She's been a featured financial presenter locally on radio and TV. She's also dedicated to helping our military and veteran community. So with that, I will welcome Maria again and have her give the presentation.
Well, thank you, Richard. And I'm happy to be here this afternoon. This webinar, Money Never Sleeps, was designed to make sure that that you are able to sleep, and not worry so much about your finances. I know that with COVID and all the things that we are going through right now, it could be a challenge, okay? But I know that, small business owners are busy, so we're gonna move at a clip. Next slide, please. Next slide. Okay, well, as Richard said, my name is Maria Gaitan, and I'm with Consolidated Credit. Consolidated Credit is one of the largest national nonprofit agencies. We do credit counseling, and in the last 26, almost 27 years, we have helped millions of people, Americans, to get out of debt. And I know that being a small business owner, sometimes your personal finances and your business finances get commingled. So that's why I want to make sure that that I convey this information to you. Next. So it's a good time, I guess, to mention that if you have, and I say this because of the experience that we have with so many people going through difficult times, not so much necessarily difficult, but unprecedented, and you may find yourself in a situation where you have, concerns about your personal finances. So, we have in our website a lot of do-it-yourself resources, and I'm going to share that with you at the end of the presentation. That's going to be in one of the slides. Next. And the good thing is that to speak with one of our certified credit counselors, it doesn't cost you anything. They will look at your financial situation, they'll pull your credit report. And as a small business owners, one of the additional benefits of doing this is because some of the questions that they're going to be asking you are probably some of the questions you need to be asking yourself about your business. So again, we're going to give you the phone number and you're welcome to call and get a free consultation. Anyways, let's go ahead and get started. Next slide. So how do we get back to normal? I mean, and this is something that I've been struggling with lately because of so much actually so much going on as far as the COVID, pandemic sort of like reigniting and, concerns all over the place. But there are things that you as a small business owners, you need to keep focused and concentrate on the things that you are able to control. So I always ask people, where do you want to start? And I tell you, from from a perspective of a counselor, I like to say, let's start with credit because it is so important. Then we're going to talk a little bit about budget and we're going to talk a little bit about savings. Next. So I say, well, what is credit? You know, when I ask this during a class, people tell me, you know, it's a loan, it's your credit card. But, you know, I like to say that the word credit, actually in the dictionary, one of the definitions is recognition. So when people say, you know, I'm going to give you credit for a good job, you know, they're recognizing you. So credit, actually, it could be translated to the recognition of the lending institution, you know, of the type of risk that you present to them. So anytime that you go to a bank or a lending institution of any kind, or a business like an Office Depot, Office, you know, Office, Home Depot or whatever, and you get, you know, credit, you know, you get people lend you money, or they let you take, you know, buy merchandise on time, you're using credit. Next. So of course there are advantages to using credit. And I can tell you that it allows you to buy things, you know, when you don't actually have the cash, you know. In this case, as a business owner, I'm sure that you would know that sometimes you need to buy materials, supplies, you know, to fulfill orders, or, you know, just to operate your business. Also, it's a convenient way not to, you know, have to carry all this cash with you. Credit, you know, credit cards are really handy. And some of the, you know, some of the credit card companies, they give you extra benefits, okay? And it's, of course, good to have for emergency situations. Next. But of course, there are disadvantages. And I think the number one disadvantage is when you use credit, it costs you money in the way of fees or interest rate. Another thing that I find is that when you have a lot of credit available to you, you might, you know, you might be tempted to spend more than you really should be spending. And of course, you know, another thing is if you're using credit and let's say you're getting behind on your payments, that's going to be reported to the credit bureaus, that in which can then affect the type of credit availability that you have in the future. Next. So let's talk about the 5 C's of credit quickly, because these are 5 concepts that pretty much every lender considers, okay? Before they give you credit, before they lend you money. The number one, the first one is capacity. And when I say capacity, I mean capacity to repay the loan. Let me tell you something, that banks, for example, if they lend you money to buy a truck for your business, they don't want to ever have to repossess that truck. They want you to pay that loan, because they're not in the business of owning cars. Or if you buy a house and people say, oh, you know, I'm behind, so what? If I get really behind, they can always take my house. Well, banks don't want to own houses. They want to get the money. So capacity, they look at all the factors, you know, that in your business, just to make sure that there is enough sales volume, there's enough income coming in for you to fulfill your obligations. Then, of course, you have character. Character is that essential part of you that is going to make sure that those payments are made. So in one of the ways that they look at this is, of course, looking at your credit report, which we are going to talk about in a minute. But character is important because, you know, as far as your history is concerned, you know, they want to see, lenders want to see that you have the wherewithal and the responsibility to make those payments and to fulfill your obligations. Of course, you have collateral. That is, what is it that you're going to give them, you know, to support that loan. It could be a car, it could be your house. A lot of times is your inventory for a business, or it could be your accounts receivable can be pledged as collateral. Then you have condition. And condition not only talks, it refers to the conditions of the loan, like the terms, the interest rates, and things like that, but it also the conditions of the economy. Okay, today, you know, or let's say, forget today, about a year ago, in March, April, or May last year, banks were not lending any money because the pandemic just created such uncertainty. They were not taking the risk. So condition, it's about you, about them. Okay, and I say that because sometimes, let's say a bank may be thinking about merging with another bank, so they may be a little more cautious on the lending that they do. So, and then of course, again, the condition of the economy. And then last is capital. That's the last of the 5 C's. And capital is the equity that you are putting into your business. You know, banks don't like to, or lenders don't like to be the sole provider of the funds for your business. They want you to have some personal skin in the game, is what they call it. When you have funds that are your money, whether it is, you know, from savings, whether it is from retirement. Sometimes, you know, you go to, you know, you take some of that money to invest in your business. Hopefully not for long term, but you know, they want to see what kind of capital you have in the business. Next. Next, yeah. So, you know, with all that said, you know, your credit is measured using one of the ways that they measure your credit worthiness is through your credit score. And, you know, what is the credit score? In reality, your credit score is a 3-digit number. Okay, it can go from anywhere from 300 to 850. So anywhere, you know, between those two numbers, your credit score is going to fall in either in poor, fair, good, very good, or excellent. And it is a key factor in determining your borrowing capacity and how much you are going to pay to borrow that money. Also, your credit score may affect what you pay for insurance. It may also affect what, if you're asked to put deposits, for example, for utilities or additional deposits, if you're renting or leasing. So, you know, your credit score, it's such an important number and as such an important factor of your overall business ability. Next. And I like to talk about your personal credit. And the reason I like to do that is because as a small business owner, let me tell you, your credit as the owner, as the principal of that business, your credit is the business credit. Okay, you have to be really pretty large, pretty strong, pretty established to actually have your own business credit. And you may have a credit card or two in your business name. But let me tell you one thing, I can almost guarantee you that if you took out a credit card in the business name, you, the owner, is going to be asked to be a guarantor on that credit card. So that's why it's so important until you are really, really established. Taking care of your credit, personal credit, is so, so important. I actually say that good credit is an asset to your business, because if you have bad credit, it actually could be a liability. Okay, that's why I'm talking about this right now, because sometimes people say, well, we're talking about business, you know, it's a business class. Yes, but when we talk about credit, your personal credit is your business credit for a while. So just here briefly, in your credit report, a lender can find so much information about yourself. It's going to be the identifying information, which has, you know, your name, your address, your date of birth, your social security number. Then you have your employment area. You have your account information, you know, all the different lines of credit. I mean, lines of trade lines, they're called. And it could be your car loan, could be your credit cards, it could be your mortgages. Everything is going to show in your credit report. When you took the loan out, how much the loan was for, or if it's a credit card, what's your your limit, how much you owe at the moment, if you've been current, if you've been past due, everything. And of course, the credit report also shows, list all the public records if you have any, or any collection items. And the last section in the credit report is the inquiries. And this is something that you need to be mindful of. When you are shopping for, let's say, if you want to buy a car, you know, for the business or even for you personally, and you're going from dealer to dealer, make sure that they are not pulling what is called a hard credit report, because that will show as an inquiry. Okay, so you know, it's just general information, but it's good to know. Next. One of the things that I recommend, strongly recommend, is that everyone pulls their credit reports from the 3 credit bureaus: Equifax, TransUnion, and Experian. So you know there is a law that actually says that they are supposed to give you a free credit report once a year. But let me tell you, with COVID and with the instability of the economy, the credit bureaus actually are allowing you to pull your credit report once a week for free. Okay. Now, the key is here, what you need to know is in order to get your free credit report, you need to go to that link at the bottom of this slide, which is www.annualcreditreport.com. Now, there is another site that it's called Free Annual Credit Report. No, don't go there. That is not really free in the end. This is the only one by law authorized to give you a free credit report. And the reason you want to do this is because you want to see what's on your credit. That way you can address certain things that if they're not correct. Okay, next. Okay, so what I'd like to point out here is the importance of the different aspects that make up your credit score. The largest and most important piece that you need to be concerned about is your payment history, because that accounts for 35% of your credit score, okay? And that means how timely you make your payments. Okay, and that goes for every credit you have, either credit card, mortgages, car loans, anything. That's 35%. So if nothing else, just make sure that that payment goes in on time. Next is the amount you owe. That is 30%, which is also a big chunk of your credit score. For example, if you have a credit card with a $10,000 line of credit and you're charged up to $990, that your utilization of that credit is pretty high. And that is going to affect your credit score, is going to bring it down. Ideally, remember this, ideally, you should not be borrowing more than 30% of your credit limit on your credit cards, okay? That's just, you know, just a side note, just to keep in mind. Then you also have your credit history. The length of your credit history is 15%. Now, if you, I got my first credit card on my name in 1987. And let me tell you, I still have that credit card. It's a different name because the banks merged and they changed names, but it's the same one. And that gives me a bump in my credit score, because it shows that I have been able to manage my credit for that long. Then you have new credit is 10%. If you're buying too many things on credit, it's going to affect you. It's going to show. And then the type of credit you use, meaning let's not load up in credit cards. You know, it's always good to have a little bit of long-term loans, like a car loan or a mortgage, and then a little bit of revolving credit. Next. Next. Yes. So if you happen to be up to here, you know, in credit, which I can tell you from experience in today's economy and situation, we have a lot of folks out there that are, you know, struggling with the amount of credit they have. So the first thing that I recommend is for you to really pick up the phone and call your creditors, because I have to say this. In the past, maybe I wouldn't have said it, but I can tell you today that lenders want to talk to you, because the effects of this pandemic in the economy are so wide and so deep that if you pick up the phone, that means that you're interested in taking care of your personal situation, and they want to work with you. We have seen some really good things, you know, coming from lenders. Next. And of course, the reason I said earlier, you know, to pull your credit report is to see if there are any discrepancies. For example, I had a car loan, you know, that I had about 4 or 5 years, no, but 8 years ago now. And when I pulled it about 2 years ago, I pulled my credit report, and it was still showing that it was open. It didn't show that it was paid off, which had been paid off for about a year. So when that is the case, you can go to their website, you know, Equifax.com, Experian.com, TransUnion.com, and in their websites, in their sites, they have a dispute tag, and you just go there and you fill out your form. In the old days, years and years and years ago, you had to send a letter. You don't have to do that now. It's all electronic, thank God. Or, you know, you could have called, you know, pick up the phone, but nowadays nobody does that, and they don't want you to do that. It's easier and it's safer to do it online. But it's important that you take care of any discrepancies, because they may affect, again, your credit score. Next. So there are, you know, 4 different ways that we can, that I like to tell you, you know, to deal with the problems. You know, one is credit counseling, of course, you know, and like I said earlier, we offer, you know, we're a nonprofit agency. We offer this free budget and credit counseling. So you can call, you know, you can call us or any other nonprofit, but make sure that it's a reputable one. One of the things that we do as a nonprofit agency, we offer what is called a debt management plan. And it's actually, people say, oh, is that a consolidation plan, debt consolidation? And I tell them, no, it's a payment consolidation. Because we are a nonprofit, you know, we're able to work with creditors, and they lower many times. I mean, most of the time, they lower that interest rate in your credit cards to a point where it's so low compared to, you know, sometimes we see people paying 25%, 30% interest. We get them low to like 6%, 7%, 8%. So your payments are going to mostly to principal instead of just to interest. So that's one of the benefits. There is also a debt settlement. I don't recommend it, because when you go through a debt settlement program, your credit gets totally messed up, totally destroyed. Because basically what you're doing is you're paying, you're negotiating, or a company's negotiating for you to pay less to that credit card company than what you owe. And they'll take it, I'm sure, because they rather get something rather than nothing, but it's going to be a big ding on your credit report. And then again, you have the option of personal bankruptcy. You know, nobody can tell you what is right for you, only you can decide that. But you know, it's an option there, you know. And when you talk to a certified credit counselor, they give you the options, because there is a time for all of these to be the right option for you. Next. So now let's change subjects a little bit and talk about budgeting. Okay. I am a firm believer of having a budget. Okay, in the past, you know, years ago, my children used to make fun of me because I had a piece of paper and I got paid twice a month, and I got my first of the month and my 15th of the month, and I had what I was paying in each paycheck. Okay, you can do whatever you want. You can have an app nowadays, easy to use apps. In our website, we have tons of free budgeting resources for you personally. And I strongly recommend that you have that, because that you sit down and take the time to make yourself a budget. Because when you do that, then you realize how you're going to get through the month, what it is that you really need to make in your business in order to be, you know, to be comfortable in your personal finances. Next. So once you have done your personal budget, you know, hopefully, you know, it's all said and done. And, you know, the next thing is to really look at your business, okay? And it sounds elementary, but it's important that you add up all your revenue. And I'm not talking just, not just your sales, but it could be your accounts receivable. It could be investments that you may have, other things like that. So add up all your revenue. And the next, then we're going to go ahead and add up all the fixed costs. Oh, I'm going to say one more thing about the previous slide. This one, the revenue. It's good to keep track of your revenues and your expenses on a regular basis. And I'm a big endorser of having a program, whether, I don't care what it is, there's so many out there nowadays. I know that in my younger days, when I had to use one, I use QuickBooks, and I feel really comfortable with that. But there are all kinds of programs out there, and I highly recommend that you have something in place for your business. Next. So then you're gonna go ahead, once you add up all your income, you know, you're gonna subtract your fixed costs. And your fixed costs are those things that don't change from month to month. You know, your rent, your car insurance, if you're renting equipment, you know, that rental, that whether you're doing business or not, you're gonna have to pay that bill. So we're gonna deduct the fixed costs. Next slide. Then you're gonna determine your variable expenses. Now, sometimes people think that variable expenses means expenses that you can negotiate. That's not the case, because you can negotiate your rent when you first, you know, get your rental agreement. So that's, you know, that's not the case. A variable expense, you know, those are like your electricity, you know, your payroll, for example. And you know, the thing here is that these expenses are going to vary depending on how busy you are. Okay, so it is, you know, it's a good idea to have a really good handle on what it is that your variable expenses are. Okay, next. And of course, we strongly recommend that you have a contingency fund. Now, in a personal budget, this will be like your emergency savings. And on a personal level, in a personal sense, you know, that your emergency savings come in play when you, let's say, if you're sick or if you lose your job, you know, things like that. But in a business, your contingency fund is not only for emergencies, but it's also for opportunities. For example, if you are able to buy some raw materials at a discount today, you might want to take care of that, you know, because you might need it to fulfill an order that you got. You may need to, you know, hire extra help for a special project. So, you know, those are the things that you may need, you may want to use your contingency fund for. Now, what I caution you is, if you have a little money put aside for contingencies, Don't use it for your payroll because that's not what it's for. It's for things that are unforeseeable, that are not planned on your budget, okay? So, like I said, you know, go ahead and hook to the next one. Okay, so like I said, it's the contingency funds are for the unforeseen circumstances. And one of the things that I see sometimes people do is not have this. And then actually when they need some extra funding, they go ahead and get into debt, which it kind of becomes then a snowballing effect. That is not necessarily the healthiest thing to do. Next. Okay, so I know I'm going fast. We have so much to go over, and I want to make sure that there is time for questions at the end. The next thing is, you know, creating a profit and loss statement, a P&L. That's what it is called for short. It's a profit and loss statement. But basically is, you know, when you add when you have your income and then you subtract your expenses, okay, hopefully the ideal is to have a positive number, to be in the black. But let me tell you, if it's less and you're in the red, I don't want you to panic, because a lot of times, and I'm sure some of you have experienced this, when you're starting out a business, not every month is going to be a profitable month. So the thing is to be in control or to understand what happened so that you can make adjustments. Okay, next. Now, this is kind of a fun thing to do, is to create your projections. You can get a little bit creative. And I know that some business owners get excited and it's kind of like, you know, you meeting some goals that you put to yourself. But projections have to be realistic also. For example, in Florida, you know, there's some businesses that are really, really busy and do really, really well during the season. You know, from let's say October to March, April, they do really well, but then they really, really slow down during the summer time. So when you're putting your projections, make room for those fluctuations so that it's a realistic thing. And that's where we're going to talk about adjusting, you know, your budget and your everyday operations to be able to match and to have, you know, a good business, a good viable business. Next. So we talked about profit and loss statement. We talked a little bit about cash. Well, we didn't talk about cash flow, but cash flow is actually the simpler of all the statements. And this is really pretty much just shows, you know, how much money is coming in and how much money is going out. I recommend, again, to have a program, because these reports, these statements, financial statements, they're going to be available to you with the click of a button, if you are keeping track of all your daily activities. And that is extremely, extremely important. Next. So how do you overcome cash flow problems? Because that does happen, obviously. It could be that you're not selling enough. It could be that you're not collecting your accounts receivables the way that you're not receiving the money the way, you know, on a timely basis, or maybe that you have too many expenses, you know. So let's talk about these, okay? Next. How do we overcome some of these problems, okay? You know, depending on the business that you have, you know, you may be able to have a flash sale. And what's a flash sale? It's okay, we all have sales at one point or another, but a flash sale, it's something that you think through for a specific purpose. You know, you need to raise X number of dollars. So you may have a flash sale for a day or for a weekend, and really, you know, let's say give some good incentives, like some additional services, or you know, lower, obviously lower cost. But typically, again, it's something that is going to happen now and it's going to be gone, and they better take advantage of it right away. So that's one way. Next. The next thing is to raise your prices. Now, people say, oh, no, I want to be competitive. Well, yes, but on the other, by the same token, if you're selling and your volume is good, but you're still not, your cash flow is in the red, maybe you do need to raise your prices, okay? And let me tell you, sometimes raising prices is not all that bad, because believe it or not, people give value to a higher price. It depends obviously on what you're selling, what your business is, but don't be so shy, about raising your prices. It may be a good thing. It may not, or you may only raise it in certain areas and not others, but it's something to consider. Next. This is one. What I hear people say, you know what, my new customer, I thought they were going to be the best, but they're so behind on their payments. That happens, and especially nowadays, with the economy the way it is, some of your customers may be having their own challenges, but you know what? You may want to give them some type of incentive. Like if they pay within X amount of days, you give them a 10% discount. And, well, so you lose the 10%, but you gain the 90 in cash that you get. Next. Another way of raising cash is accelerating your invoicing. And what does this mean? Well, sometimes we find companies, small business owners specifically, that are busy. And so they designate a day of the month when they're going to do all their invoicing. Okay, whether it's at the end of the month, whether it's at the beginning of the month or the 15th, they usually have a date when they do all the invoices for the month or for a time period. But if you're having cash flow problems, maybe you need to invoice the minute that a service was rendered or the minute that you sold some merchandise. Don't wait until later. Send the invoice today, because the sooner you send it, the sooner, hopefully, you get paid. And again, when you're doing that invoicing, consider giving some type of incentive, like 10% if you pay within 30 days or 60 days, depending on your industry. Okay, next. So I just told you had clients that were not paying you on time. Well, there may be a moment that you may have to call your vendors and explain to them that you're a bit slow, and that you're doing this, that, and the other to promote your sales or your business, and you may be able to negotiate with them. And like I said earlier, this goes for your business creditors as well. They want to hear from you. They want to know what's going on and understand the cycle of your business. And believe it or not, you will be surprised how they will be willing to work with you. It's my experience. Okay, next. Of course, this one is a kind of a heavy duty one, slashing expenses. Nobody likes to do that, but then, sometimes we just have to sit down and look at what we're spending money on. And, it may even be that you may have to lay somebody off, who knows? But these are the type of exercises that are, as a business owners, you have to do, face the reality of the moment, okay? You may have to, for example, if you have, let's say, an equipment where you're making payments, you may want to sell the equipment and just lease it, if it's cheaper. There's just different ways to reduce your expenses. And then next, of course, option is to get a loan, to get a business loan. And like I said earlier, your business loan is most likely, almost 99.9% of the time, going to be guaranteed by you personally. So, it's You know, it could be a loan on your business inventory or your accounts receivable or your home, you know, your personal home. It could be anything, but, you know, a loan is always an option, okay? As long as you have a plan of when, you know, you're gonna be, how you're gonna be paying it back and what is the loan going to be for, okay? Okay, next. So we're getting to the point here now where we have ins and outs of small business loans. You know, it is, you know, it's hard to kind of go over every single thing, but here, let's go to the next slide. And I'll tell you some of the important things that you need to keep in mind. First of all, like I said before, build your credit score. Now, you should shop around so you are, you know, learning about different banking institutions and whatnot. So, you know, learn the requirements from the different lenders. They collect your data. And I mean, they're going to ask you for your articles of incorporation, for your financials, maybe even a resume, a business plan. And then also you should list your collateral. Next, you know, the things that you have available for collateral. So we are getting now to the point where I think I really went through this very fast, but we have a few minutes, you know, to ask some questions. For you to ask questions. Hopefully I have a good answer for you. Do we have any, Richard, by any chance?
I don't see any at the moment. I'll see if there's just a lag. I did write down a couple things to ask you.
Yes.
Based on your presentation. You mentioned that during the current COVID situation that businesses can pull their credit score once a week.
Credit report, not credit.
Report.
Credit
sorry.
report.
Right, report. Is that got a deadline or an expiration?
Yes. As of right now, it's to the end of the year. You know, the end of this year. So
after that, it would be wise for them to pull it once a year, or
exactly. And since there are 3 credit reporting agencies, what we recommend is that you take one, you pull one at the beginning of the year, another one somewhere like around May, and another one maybe September, October, so that you see, you know, one of each in different times, so that you can see, you know, if things have changed or if there were any mistakes, if they were fixed.
If a company is going through a difficult period and let's say they're having a trouble maintaining a good credit report, credit score, let's say it gets less favorable, typically what could they expect in terms of time to sort of repair that and get it back into a more favorable position?
Okay, that's a really good question. You know, creditors, I mean lenders, they report on a monthly basis. Okay, typically they report on a monthly basis to the credit bureaus. So if your situation changes, it could take anywhere, and you are able to start back and making your payments again. It could take anywhere from 2, 3, 4 months before the credit card companies re-age your history and your credit score changes. Now, not everything is that simple though, because sometimes, you know, people may have collection items that need to be paid. So if you're able to pay them, then fine. Then your credit score may improve in a relatively short time. But what we find is that it really, in reality, it takes 6 months to a year to really see a significant improvement in your credit score.
Wow. Okay. You mentioned
let me say, the good thing is that I don't care how bad your credit got. Like about 10, 12 years ago when we had the big recession and so many people lost their homes and their credit was, you know, tanked. We've seen so many people rebuilding it, you know, and getting ahead. So it's always, there's always hope, you know, there's always something you can do to improve it.
Sure. Yeah, that's good advice. I was making note of your comments about balance sheets, profit and loss statements, and things, cash flow statements. Do you find that small businesses get themselves into difficult positions because in any of those, because they lack an understanding of how to prepare them, or they spend just not enough time on them? I always wonder what
it's a little bit of both. It's a little bit of both. Being a small business owner, you're everything. So some days, you might only sleep 4 hours because you have to do so many things, and sometimes, putting this for later, and before you know it, you're behind. Okay, so that is. Yeah, staying on top of it is one thing. And that's why I recommend a program, because it makes it so much easier to track. But the other thing, and this is a good point, I strongly recommend that everyone has a trusted accountant or a strong bookkeeper that can help them understand the differences, because every business is different. And so what it's the right thing for you may not be the right thing for the next person, but an accountant or a good bookkeeper, and I mean a professional one, could help you navigate that. And also take care of things like taxes that you may need to be paying. And, when you start, you don't realize how many things, you're going to need to be thinking about, as the owner. And so having good advice, it's always important. And I strongly recommend that.
Yeah, I can tell you that, at least on the city side here, that we had a program where we were assisting small businesses over the last year with the effects of COVID on their financial situations. And one of the things that we found when we were reviewing applications for the program was that some of the small businesses were in what I would say are difficult lease terms with their spaces that they're in. And I don't know, maybe you can talk a little bit about this, if small business owners understand the true costs that are involved when they enter into a lease with a landlord with respect to the escalators that happen typically from year to year. It goes up. The common area maintenance costs that go in and they come onto the top of your base rent.
Yes.
Could you just talk a little bit about what you see on your end?
Yes, well, it's interesting. And before I forget, Richard, I wanted to let everyone know that we at Consolidated put on a 6-week training. We call it Business Sense Bootcamp. And we're starting the next session on September 21st. So I would like to send you that information so you can, put it out there for others, for small businesses. But one of the things that I added in the last session was a commercial realtor, because I'm not an expert, to be honest with you, on leases. And they could be tricky. You need to understand, like you said, common area costs, insurance costs, or whatever it is. Kind of like when you have a homeowner association, things that are on top of your monthly rent, for example. Yes, so I do not have any great advice there. I just think that talking to a professional, it's probably the best before you sign anything.
During the past year, with the COVID impacts, how has it happened when some businesses have fallen behind because they either had to close because of COVID or they had to really restrict their operations? Have you seen anything impacting their credit reports because of that? And has there been any, say, flexibility on the part of the reporting agencies on how they
the reporting? Yes, no, we both, yes to both. Yes, we have seen people's credit affected tremendously, okay, negatively, obviously. And the reason is because the credit bureaus, the credit reporting agencies, they don't decide. They don't decide what goes on your credit report. It's what the creditor sends to them. Okay, so what they have, made the concession is to be able to give you that you can pull the report once a week to see what's going on. But that's why I was saying at the beginning that it's so important for you to contact whoever you owe money to. Whether it's your mortgage for your home, call the bank, the lender that gave you, that is the servicer of that mortgage. Call your credit cards, because when you do that, they are different programs. For example, what do you call it? Where they may add the payments to the end of the loan, or they may give you a break for X number of months. But when something like that happens and you get a break, make sure you understand what they expect after the time expires. Because what at the beginning last year, what we saw, like in June, we had people calling us desperate because their mortgage lender gave them like a 3-month reprieve, but then they had to pay 3 months plus the current month, so that was 4 months, and there was no way. So and a lot of times lenders or creditors are slow to react, because things like COVID happen so unexpectedly for everyone. It's not like you are ready for such a disaster. So like I said, what we've seen is that there are everyone has been really trying to, most companies are trying to work with the people that are having difficulties, because they want to get paid in the end. Now, the one thing that is interesting, if forbearance, that's the word I was looking. If a company puts your loan on forbearance, that is not considered delinquent. Okay, so that is not going to show negatively in your credit report. Now, if you don't pay it and you just say, oh, I'll catch up in 3 months when I have the money, then it's going to show on your credit report. But if you call them and they put you on a forbearance plan, then that is good for you. It's not going to affect your credit. But make sure you understand what they expect when that time is up. Okay.
Yeah, I'm glad we're having this conversation. It's timely because I'm sure that there's some viewers out there that are probably experiencing that or know somebody who's experiencing. So that's a very good point. I'm glad you're emphasizing that, because I know we saw it on our side. I talk about our program with forbearance or deferrals. Where rent would be deferred for a few months, but typically that just gets back-ended. So at the back end of the lease, it just gets tacked on. So
but it's not typically, if it's what you negotiate. People assume a lot of things. You don't assume anything. Ask for clarification, because that's what was happening. Of course, the business may want to not say too much, because they want you to pay back right away. But you may not be able to, so you need to be very realistic. And then the other point I was going to make, oh my goodness, I just lost my train of thought. I'm sorry. It'll come in a minute.
It's okay. Yeah, that's all good. I'm still looking to see if there's any other. I don't see any, but I think our time is just about up.
Okay.
And thank you very much for your presentation and great information. And with that, we will. And
last thing I'd like to give you is, because we didn't show that slide, their phone number, if they wanted to call, and speak with a counselor, with a certified credit counselor. The phone number is 800-551-9414. I don't know if we can put it on the chat right now. It's 800-551-9414.
Are there offices for Consolidated Credit throughout the South Florida area?
We're in Plantation. Our headquarters in Plantation, but I would say 99.99% of the business that we do is on the phone. We hardly ever see people face to face. There's no need for that, really.
Gotcha.
But we do. We have it available. Now, I have to tell you that right now, with the spike in COVID cases, we scale back again. We're not seeing anybody in person. But, if somebody needs to, under normal circumstances, they could make an appointment. Okay, but typically, it's on the phone. It's an appointment on the phone.
Got it. So you ask them to schedule something via your website, and then you.
Well, they can call. Then somebody will pick up. We have plenty of counselors available out there. And if not, they can actually go to their website and request a call from a counselor at their convenience. Their time.
Okay, great.
Okay.
Thanks again, Maria, for your timely information.
Well,
And
thank you,
with that,
Richard. Thank you for having me.
we will turn it back to myself to talk about, give you a little preview of coming attractions for the next part of the program. We will be taking a break shortly before we get into that next segment. But as I said, to give you a little preview of that, we are going to have someone speaking on 2021 business plan types. So she will be joining us shortly after we take a break, and then we will resume the program. And then just to give you another sense of what to expect after that is that between 5 and 6 we will break, and then we'll have our evening sessions with 2 speakers from 6 to 8 p.m.